Welcome back to Income Trading 101. Today is February 22nd, 2021. We're going to take a look at Facebook stock today. You can see they had earnings just last month. Their earnings, they actually beat their previous estimate. They beat the estimate, surprised the street by an increase of about 20%. Pretty consistent stock. It's been beaten up a little bit lately in the news. And so let's just take a look at, I guess that's about as much data as I can get on Facebook. It's looking like, what would that be? 2012, May of 2012. So that's good. Pretty strong uptrend. It's funny, this is not a company I look at much. I read the headlines in the news and then I kind of move on to whatever I was doing. This drop right here was very much tied to the coronavirus. So we're just going to go ahead and start time sort of in on the recovery. Maybe even take it to April. I'm going to get rid of volume as I always do. Just because I don't use it as one of my factors, one of my indicators. Let's go ahead and start off with our moving averages. It would help. It would help if my fingers were doing exactly what my mind was wanting them to do tonight. So here we go. Go ahead and switch this around. I'm going to do a 10-day, a 20-day, and a 60. I want my 10 to be my buy signal, so I turn it green. I want my 20-day to be my sell signal, so I make it red. Makes it really simple, really clean. And then this yellow line is going to be a 60-day, which in trading equities, that's about 3 months. So no surprises here. Actually, you know what? I am a little bit surprised by one thing, and that's how much at the 1-day level, how closely the 10-day and the 20-day really are staying during this period. Now, granted, it's almost trading flat at this range. We're gonna, before the end of this video, we'll look at some channels and really start to analyze the sideways market more or less, and maybe even consider some trades that make money in sideways markets. But for now, I'm not seeing a whole lot that makes me feel any kind of way with the daily charts and the moving averages. Right now, you can see that the 60-day, we're trading below the 60-day moving average, but both the 10 and the 20-day are about as close as can be. And that sort of congestion, I don't advise trading in if you're trading at the daily level. Let's drop this down to the 4-hour. Still a little muddled. I do like this cross that happened in early December, but I would have gotten chopped up because I like to exit when prices touching or going through my averages. So let's take it lower. We're going to go just keep dropping it until we start to see something that's relevant. So at the 1-hour level, I see right now the 60-day higher than the 20, higher than the 10. That is an indication of a short, right? That's a market that's heading lower. Problem, of course, is right now price action is actually touching our 10-day moving average, and I don't like that. So let's just keep taking a lower and see if at any point we're going to get anything a little more clear. So look what's happening here. So at on the 30-minute chart, you actually see the 10 and the 20-day period beginning to cross. So that means it could be interesting in the days to come. Now, I wouldn't get involved until, I like seeing all three moving averages in order. I don't like periods where where they are out of order. Like right here, you've got the 60-day, then the 10-day, and the 20. I like this side of the graph of the chart where it's 60, 20, 10. I want it all in order just to confirm the trend. So, and that way, if I can confirm the trend, really my trade is based on the idea that the trend is going to continue. I'm not really a counter trend trader. There are some out there. That's just not my forte. All right, let's get out. Let's go back to daily bars. We're going to get out of the moving averages and look at the MACD. We're going to see if this is going to give us any more information. With it being choppy and somewhat sideways, I imagine that MACD is going to, in many ways, be inconclusive, but we'll take a look at it too, just for consistency's sake. And sure enough, you can see when I say sort of, I mean, this is, it's hard to make a trade here. You could have bought in the oversold area, but would you be looking to sell in these smaller little glitches? They're not glitches, just tighter markets. So when the markets are moving strongly in one direction and when they're going sideways, I really don't think this is I don't think the MACD is the most effective, at least at that specific time frame. Now, it only seems right that we play with time using the MACD as well, since we do it with the moving averages. So let's check out the 4-hour and see if it gives us any more. Still pretty choppy in the most recent time, so it's hard to say what's going to happen. Let's look at the 1-hour. Well, the 1-hour has given some bigger and clearer buy and sell signals. I actually don't think this is a bad one at all on the 1-hour. If you're able to pair this with another indicator like the like even simple moving averages, because the MACD itself uses an exponential moving average, this actually could be really useful. Or they could play a role together in your portfolio. Now, right now we have the MACD line crossing or coming close to crossing the signal line. So again, that leads me to say, like, at least at the 1-hour level, and we saw this in the with the moving averages as well. Sometimes you just have to be patient and wait for the trade to come to you. And so we'll sit back and watch and just see what it's going to take. It's good to have parameters about, if this happens, I'm going to get back in. If this happens, I'm going to get out. Make those in advance, and trust me, it'll make your trading a lot less stressful and also a lot more profitable. So dropped it down to the 30-minute level. I don't see a whole lot of difference other than we see a cleaner break at the end, and we'll just do the 15-minute just for the sake of it. And sure enough, at this level, at the 15, it looks like it's becoming more of a buyish signal, even though the last few data points on the 15-minute chart have been to the lower end. All right, let's get out of the MACD. We are going to I don't even know if there's anything to look at from a true Fibonacci end of it. So let's take this back to the 1 day. That way we can get more data. Trust me, the more data you can use in your analysis, especially technical analysis, I think the better. As long as it doesn't lock you up. There's such a thing as paralysis by analysis. You still have to be willing to make the trade. So you analyze the data points that are there, and then you make a decision. Sometimes it's worth delaying that decision for a day or two just so you could get clarity around your other indicators. So if I'm going to do any sort of a Fibonacci retracement, it's going to be a retracement of this up move that we saw from mid-March all the way to this top back in August. And we know part of this was a recovery from the what do you call it, the pandemic. So it's but we're still going to use it right now. I really want to see if it's going to verify, validate any sort of support or resistance levels, and you can go from there. Let's see. All right, so we haven't even quite gotten to the 38.2% level. So I would argue that right now the Fibonacci retracement isn't even as valuable. So certainly haven't gotten to 50% or anything like that, which is good if you own this stock because you probably don't want it to go lower. So let's go ahead and let's draw some pretty lines, right? I love drawing visuals because it really helps. And my go-to visual is the, what do you call it? Just the parallel channel. Because what ends up happening is we see little snippets all over the place of movement, stock movement that mattered, but at the same time it may not have mattered nearly as much as we would have needed in order to make it to use it for trading. Get out of that. Delete. All right, perfect. So let's do this once more. I want to take these tops here. See if this is going down anymore. So I don't have to draw these channels perfectly. I really just want to get as much of the data inside the channel as possible. So I don't mind this period here where we broke the channel a bit, but you can see just by connecting these tops that we're getting lower tops and lower lows, which is the definition of a bear market in Facebook. So we'll see if that holds in the coming days. I know it's got caught some flack in the news. The industry is hurting a bit as well, based on some things that the competitive nature of that business. So we'll see how Facebook faces their fate and pulls back and tries to move ahead. But ultimately, that is all fundamental analysis, and this is about technical analysis. So I would definitely be leaning more towards the lower price side of things right now. However, this is one of those stocks that is just hard. It's hard to justify selling because they've been so dominant for the last several years. If I were to sell this, I would do so with a put option or a put spread. I mentioned that there's some trades that you can get into to benefit from a sideways channeling market. I love trading iron condors, which is an option strategy where you're selling both a put spread and a call spread. I also think selling strangles in this scenario would be beneficial as well. Just because you have stock within a tight range, and there are those others. Those other strikes are being quoted, so you can ideally find a trade that would be give you the outright thesis or the outlook that you like to express in the market, and also minimize your risk and see if you're going to make some money. So that is it. Hey, thank you guys so much. If you haven't already subscribed to this channel, please go ahead and hit the subscribe button so you can be kept abreast of when I make new videos. That is it for this evening. You guys take care and happy trading.